Hello, my name is Steve Bigelow with the Candlestick Forum. We've got an extremely high probability trend pattern occurring in this market. Last week, we saw the markets come back up through the T line after trading off from this big last gasp buying, turning into a bearish reversal. But the fact that the Dow did not do a reversal signal told us the probabilities were strong if they continued to stay up above the T line. However, you had two factors going against you. One, this was not a reversal signal. This was just an up day. And two, stochastics were still heading down. So the downtrend continued the next day when it closed back below the T line. On the same scenario, the NASDAQ was more compelling and it did a best friend type signal, but stochastics weren't in the oversold area, still heading down at the time. So when it opened, it needed to see positive trading. The fact that we could see that it did a bearish engulfing signal right at the T line told us this bounce was not anything more than just a bounce, that the downtrend would continue. Now we've got a bearish J-hook pattern. Wave one, a bearish J-hook going into wave three. Probably added with the stimulus that the interest rates are starting to rise. The Fed comments were worried about inflation. That's what kind of pulled the plug on the market. But what we can anticipate that if this is wave one, wave three is implying there's still more downside. So we saw that with logical trading positions when the indexes first started going negative. We could find the charts that were telling us it's time to go short because we had kind of a inverted cradle pattern with a close below the T line, told us we could start shorting. And now this becomes a very simple trading strategy using the T line. You can stay short until you see a candlestick buy signal and a close back up above the T line. Even in this area, if you decided to take profits on the short side, the fact that they failed at the T line told you could reshort it, looking for wave three to the downside. So if the Dow is doing a bearish J-hook, the NASDAQ is doing a bearish J-hook, our sell signals that we identified, like in PayPal, is still in a downtrend with also a bearish J-hook pattern. This creates high probability expectations that if you stay short, you're still in the right direction. Apple still trading below the T line, with the likelihood it's eventually coming down here to the 200-day moving average. And IMMR, high probability analysis, bearish engulfing, closed below the T line, did a bearish doji sandwich. Very simple trading strategy. All you have to do now is stay short until you see a candlestick buy signal and a close back up above the T line. This is a higher trade probability. This is called a blue ice failure, which we pointed out last week, where they fell through the ice, they came back up. You can see how they failed to find the hole they fell through. The sell signals tell you they drowned. They're going to the bottom of the pond at the 200, which is essentially what this chart has done. So if you know there's an additional improved probability, we're going to be shorting LCSK after it traded down big, but notice that it failed as a blue ice failure, making this level right here the next likely target. The major advantage of candlestick analysis is that human nature does the same thing time after time. All you have to do is learn the signals and patterns, and you're going to put yourself in higher probability trade situations. So right now, with the NASDAQ in the process of doing a J-hook pattern, obviously there's a lot of stocks that are going to improve the profitability of going short because they're in the process of doing bearish J-hook patterns. So with that, we were going to be doing a training session this Saturday where we put all the probabilities in the same visual glance. That if you can see a candlestick reversal signal or pattern, and it has one confirming indicator, that's good. But if we can see instantly that it has 2 or 3 or 4 confirming indicators, that's basically is not only improving the probabilities that you're going to be in the right direction, but it's going to magnify the potential profitability of that trade. So come join us. They're inexpensive. We advertise this as being a 1-hour training session, but we cram 2 hours into 2 hours. So with that, good trading. We'll see you in the chat rooms.